Okay. Okay, can hear? Okay, so can see screen on my phone. Okay, so for today, what I'll do is I'll get JT to share with you more on the fundamental aspect first. Later on, then I'll talk about technical analysis. Okay, so JT will go through with you, sharing with you also the report. So I'll just pass this over to him right now.
Are they able to hear me? Yes. Can you hear me? Are they able to indicate to me that they're hearing me? Guys, please let me know that if you cannot hear me, okay, you can actually WhatsApp and interact with me if, let's say, you have any questions. And if you cannot hear me, okay? So the idea today is that I'll be taking over. Oh, great. You can actually chat here. Guys, sorry, I'm a pretty noob at this, so I will just be taking some time to get accustomed to this. Right? Okay. Today I'm taking over to talk more about fundamental analysis and the sentiment analysis because usually when Kayong and I are trading, I'm actually the one who actually provides him with some insights and market outlook on what's happening next week. Analysis and sentiment analysis based on some tools that we have, our views from last week. So before I get started, just want to have a quick recap of what happened last week. It was a pretty eventful week last week. As you can see that a few key things that happened, which is related to what happened and how we will view the market this week. Aussie CPI Q quarter on quarter, we are looking at basically achieving the forecasted amount, which is at 0.4%. Okay, bear in mind this one. We'll come back to that later. FOMC on Thursday. FOMC came out as a pretty hawkish statement from Yellen, but after the FOMC release, there was actually a dip in dollar value. Okay, if you look at the DXY, which is a dollar index, dollar currency index, this period here was actually the period where Yellen came up with a pretty hawkish statement. But despite that, okay, double sounds. Hold on, there's a double sound. Okay, better. Okay, thanks, Lester. Okay, despite that, right, what we are actually looking at is a weakening of USD, despite many people saying that the USD has been strengthening for quite some time. So this actually was a decoupling of fundamentals and sentiment, strengthening recovery of the US economy. At the point of time when FOMC released the FOMC statement, there was a bearish dollar, which means the sentiment was actually pretty weak. It didn't help when on Friday, when US released a statement on GDP. Take a look at that. Okay, when it fell way below its expectation of 2.6%, instead of the usual, instead of the forecasted 26%, it actually came up 1.2%. Plus the FOMC statement, the price of dollar actually went down by a lot. That gave us a premise for this week. Dollar has been across the board, and you can actually see it in most major pairs: pound USD, USD yen, even the euro USD. Okay, and to end off last week, we actually had a BOJ releasing a statement that they are going to continue their stimulus with a lot more of this money pouring into ETF-based stimulus. Really disappointed the market. Okay, most people has been expecting a lot more than just ETF stimulus, and for that reason, despite having stimulus, despite Japanese economy being very weak, the market actually was disappointed with the stimulus, and hence there was again across the board strengthening in yen, despite what the BOJ wanted to do, that is to weaken yen instead. So having said that, let's go back to this week. So what we have right now is that we want to talk about three key currencies for this week, and based on what we know last week, what can we actually do today? Okay, the key idea for this particular segment with me, right, is to help you understand where is our thought process when it comes to setting a directional. Okay, so you can take in whatever we say today. By the end of the day, I wish to impart the skill of actually setting a directional bias so that you can actually trade based on your own strategy, based on our strategy, doesn't really matter, but get away from bad trades. For example, at this moment, you do not want long pound, for example. Okay, let me just explain a bit more. So I'm going to talk about Aussie dollar today. I'm also going to talk about pound, and I'm also going to talk about USD. Okay, for those people who are aware, who are sharp, you will know that for this week, there are three key major events happening. Number one is RBA deciding on rates. And number two, even bigger than RBA itself, is the BOE deciding on stimulus, whether to cut rate plus the stimulus or just the one of them, QE and cut rates. And finally, on Friday, we actually have the non-farm payroll for USD. Okay, so let's start with this FER, the FX Edge report. This is basically an index that is based on all the economic data that was released last week. So what we have here is actually all the aggregate of all economic data. Okay, looking at how the economy for each of these currency, right, the underlying economy, right, has been expanding or contracting. Let's just take a few economies, for example. For Aussie, it has been weak for the past 52 weeks. And last week, for the last 7 days, it has actually increased, but a very minimal amount of just 0.06. Now, it doesn't matter whether or not it's percentage or points. Basically, what you know here is that 0.06 is a smaller increase compared to, let's say, Kiwi, a 0.59 increase. So that gives you an idea of how to use this FER. Okay, let's take another example. For example, take the last one. Pound. The UK economy has been weak so far for the past 52 weeks. And at the same time, it also expanded a little last week. The weekly change, the last 7 days, it has actually expanded little in terms of economic data. Okay, so I would just want to point you towards JPY, Japanese yen. The underlying economy for yen is still extremely weak. If you can tell, it is actually the second weakest within this eight economy here. And on top of that weakness, for the last 7 days, it has also been contracting. So this tells me that the Japanese economy is still very weak. Okay, so for this week, we are actually looking at Aussie. I mentioned just now, it is weak, but slightly expanding. We have USD, which is strong. And at the same time, last week, it has actually expanded. And for pound, weak and expanded slightly. Okay, so I'm going to talk about how we came up with this directional bias. For those who are interested, you can actually write down some notes. And if you wish me to explain further, you can actually message me. I'm staying with my WhatsApp right now. If you want to tell me anything, you can, because I want to not have this here. Okay, Ken. So if you have anything, please WhatsApp me. Now, let's talk about Aussie first. For our directional bias on Aussie, you will realize that I actually have two, which is neutral to slightly bearish. Why slightly bearish? Simple, because economy is still pretty much in the red. I'll explain. Okay, for Aussie, we are neutral to slightly bearish is because number one, FSI, the fundamental strength index, shows us that Aussie is still pretty weak with minimal expansion. When I say minimal expansion, if you go back here, you see that it's actually 0.06. That's what I meant here. So with minimal expansion and when its economy is still weak, I would definitely look for a short and not look for a long. Okay, because I don't see and I don't foresee any strong up move or strong bull move coming from this particular currency. Okay, now the reason why I would say it's neutral is because of the second point. I mentioned just now for last week, CPI quarter on quarter, I was at 0.4%. Now CPI was a indicator or economic indicator that was very much focused by the Aussie, the RBA. Okay, and according to forecast, it was 0.4%. It came out 0.4%. That actually met the expectation, and because of that, RBA's odds on cutting rates becomes very muddled. It is no longer as clear cut as it was before. If let's say CPI Q and Q came out 0.2 or 0.3%, they would have said, okay, RBA would definitely cut rates, but there was actually a slight improvement in the economy. And because of that, Stevens may not want to cut rate, and that's what's been that's what the news has been talking about recently. That later. But one thing I need to point out to everybody here, if you can hear me, okay, is that CPI year on year has actually fell short of the 1.1% forecasted. Okay, it is actually still around 1%. Okay, if I may, I'll just show you, show everybody here. This one you have to go to FX Street because Forex Factory didn't show. Let me see if they show. Yeah, they didn't show. Okay, you can see consumer price index, which is CPI, year on year for quarter two is actually 1% as opposed to the forecasted 1.1%. So this still means that RBA might still cut rates. That's the reason why a lot of people are saying that RBA's odds on cutting rates becomes muddled. You're not sure whether to cut or not. And if you have Googled RBA, and it's very simple, you just go to Google, you just click RBA, and then you just go to news. And this is exactly what you will see based on this search. And it is always very helpful for me as a person, as a trader, to know what the market is thinking at the moment. And this actually tells me what is the sentiment of the market. Okay, so basically what we are seeing here is that this is the news that actually took my attention. So they were asking this very simple question: will the RBA cut rates tomorrow? Very simple. If let's say RBA tomorrow cuts rates, I am then very bearish on this currency. If RBA doesn't cut rate, I'm expecting a huge spike, or rather a spike within Australian dollar, and eventually goes back down again. But that means that sentiment is bullish, at the same time fundamental is bearish. When fundamentals and sentiment doesn't align, I will get out of any of my Aussie trades. Simple as that, right? So if sentiment and fundamental aligns, both points towards bearish, I will then stay within my Aussie trade or even go in with another Aussie trade, okay, to short it, right? So as I mentioned just now, the decision is seen as close call after last week's better than expected inflation data, but the AXX rate indicator shows traders have priced in a 64% chance of cut in interest rate to a record low of 1.5% tomorrow. Now, to make things clearer, before the CPI Q-on-Q data comes out, there was actually a 70% chance of a cut in interest rate, fallen to 50% after CPI Q-on-Q. And today, when I search for this particular news, it says 64% chance. Now, is this reliable? Everybody will ask this question. Well, they say 64% chance. Will it really go according to this 64%? 64%? I wouldn't say yes. The reason is because markets always have surprises. Central banks always have surprise. Central bankers likes to give surprise. Not Stephen, sometimes Mario likes to give surprise as well. So should we trust this? We shouldn't trust this. What should we do is to actually protect ourselves against any form of surprises within the market and make sure that your stop loss is in place, your break even is in place, and just be very, very on point. Just be very sharp of what the news is coming out tomorrow. Let's say if tomorrow they say, oh, okay, at that point in time, the news come out is cut rate. Then if you are shorting Aussie right now, you just keep in the position. That's good news for you. You probably see a huge jump in your profit. But if you are against that, which means you are longing Aussie, and the news came out is to cut rate, be sure that you are either out of the market or you actually have a break even or a stop loss in place already. Okay, so this is a lot like how you want to align the fundamentals of Aussie economy and the sentiment of Aussie currency. Basically, if the traders out there, 64% of them thinks that they are going to cut rate tomorrow, and if it goes towards their expectation, it will go down. The price of Aussie dollar will more or less go down, okay, with a high percentage, high possibility. But if it goes against the expectation and they stay at the current rate, which is 1.75%, we most likely will see a strengthening of Aussie because there is a misalignment between fundamental and sentiment already. Okay, so this is Aussie. Basically, the reason why we are neutral is because we want to make sure that we have enough information, aka for tomorrow, at this point of time, when Aussie released their news, which is at 12:30 p.m. here, okay, Singapore time, I will be in front of a com at 12:30. Once I know the news, once I know the news, I will either be shorting Aussie or I will not be inside the market trading Aussie. Okay, so this is what we are looking right now. Moving on. Okay, this is just basically a 52-week view of how the Aussie economy has been doing so far. I have not sent you guys the FER report for this week because I found it there was some problem sending you. I will just be attaching this PDF later into the group chat so that everybody can take a look of what the other economies are doing as well. But understand from my point of view, what am I actually looking here, right? So if I look at Aussie economy and then I see that whole bunch, the entire year, which is 52 weeks, is in the red, I will not be longing Aussie dollar. Why? Because the upside to Aussie dollar is actually kept. I will only be looking for shorting opportunities. When there's a bad news in the market, it most likely will go down a lot faster than it actually goes up if there's a good news. Okay, I will wait until RPA, more or less, more info and less volatility to make a move on my trades. This gives me more confirmation and more confidence and more conviction to see my trades through. Of course, if you have any trades in place already, make sure that you have SL and break even in place. If let's say if you are working, just make sure that your trades have a break even in place so that at least you don't get any nasty surprises. Okay, so this is for Aussie. Any questions that you may have, feel free to message me and I will answer you. Okay, if not, I'll just move on to pound. Now for pound, very clear cut. To me, the FSI shows that the pound is weak. Okay, we go back to our slide just now. You see that it is now in the red despite the slight expansion last week. I've always been bearish on pound. Why? The reason why I'm straightforward bearish on pound is because number one, fundamentals shows me that the UK economy is weak. Number two, the sentiment for the UK and EU in general is negative. If people talk about Brexit, you think bad news. Who thinks about good news in Brexit right now? If you ask me, nobody thinks of that. Even in Singapore, even the banks, even MAS thinks that Brexit is bad news. Even Obama thinks Brexit is bad news. Okay, except for perhaps a few leaders in UK who thinks that Brexit is good news, but most of other people who are more or less involved in economy policies would think that Brexit is bad news. So I would say the sentiment in UK, in EU, in general, is negative. Traders are also expecting a rate cut plus a stimulus from Mark Carney tomorrow, and BOE is pressured to come out with all such easing monetary policy, right, to these expectations of these traders. So again, talk about sentiment. Number one, they think that Brexit is bad news. Number two, the traders are also pricing in and expecting rate cuts and stimulus. That all points towards negative sentiment. And when fundamental and sentiment is bearish, I would say that pound directional bias is one clear-cut bearish to me. Okay, so again, I will do the same thing. If I were to Google Brexit, or if I were to Google BOE, all this news will come out, and then you will see that what I said just now is not my point of view, rather is the market's point of view. Of course, take all this news and article with a pinch of salt. Know that all these news, all these articles are pointing towards one direction. You're not basing this information to trade. You are more or less just finding out what the market sentiment is like. Okay, so what this article says is that Brexit recession looms as UK economic indicators flash red. What they are actually saying is that after Brexit happened, UK's largest economy, UK's largest component of the economy, which is the services PMI, fell in its largest rate, which means it fell the most after Brexit happened, which is July. And when the indicator came out, the news was very bad. The entire pound market across the board fell. So this gave a backdrop of Brexit being the bad news. So most people will say that Brexit is bad news, and they use this particular services PMI activity index to actually back up their point in terms of that. That is the reason why I am confident to say that number one, sentiment for the UK and EU is negative in general. Okay, and number two, the sentiment for traders are expecting a rate cut in stimulus and hence being bearish is when you Google just BOE, news about, oh, yeah, doesn't show me. Never mind. I'll just do the same thing again. If I just Google BOE, and then I'll just go to the news part, and you will see that each of these articles says basically the same thing. Carney nears rate cut after BOE detour and road to new stimulus, basically saying that Carney actually avoided raising rates last month because he wanted new data. Now, new data is out, new data shows it's bad, and whether or not he will just stick to his words and cut rate and increase QE. All right. So you see this one, it says Bank of England prepares to cut rate into uncharted territory. And there is also this that says that BOE's easing options and oil spot least questions for the week. Poised to slash goals forecast by Miguel Martin, UK interest rate set to cut by England on Thursday, blah, blah, blah. PMI is focused, BOE and jobs. All these shows that the people, the traders, are actually expecting BOE to cut rate plus to have a QE. Okay, so if one way or another, BOE doesn't cut rate and just QE, or if they just do QE and doesn't cut rate, it might disappoint the market just like BOJ. Okay, so let's take a look at this one. Just 2 hours ago, what is Reuters saying? Bank of England prepares to cut rates into uncharted territory. Rate going to cut rate for the first time since 2009, seeking to stop Britain's vote to leave European Union from kicking the country into recession. Basically, the story is the same. After Brexit, they are fearing the UK economy is going to go into recession. In order to stop that from happening, BOE wants to do something, right? So what is that something? They want to do QE and they want to do cut rate. But is Carney going to do it? Most people think he's going to do. We always have surprises from these central bankers. Now, even though I'm bearish, I'm always thinking about what is the downside. What is my risk? Let's say I'm going to be going there for pound USD. Okay, I also want to put SL risk management in place. Okay, I'm not 100% confirmed because again, there's always surprises in the forex market. So I'm going to go back to what Kyle has always been teaching us about risk management. Don't ever go in with 100% confidence. Okay, that is scary. You want to go in with a good psychology to know that you have conviction in this trade, but always have the reserve to put a SL. The downside of shorting BOE, or sorry, I should be saying shorting the pound, is if BOE holds steady. Number one, it doesn't cut rate. It doesn't want to do anything and basically just say, I'm waiting for more data, which is exactly what Yellen did last week. Or if BOE says, I'm going to just cut rate, but there is no QE. Again, this could mean disappointment for the market. And this happens, what I'm expecting is a spike in pound first before coming back down again, which is exactly what happened the last time when they actually announced that they are not going to cut rates. Okay, let me just flash out the chart. Okay, if you look at the H4, if you remember, I can't quite show you the exact place. Okay, just see the gray box here. There was actually a spike here. If you remember, that's exactly when BOE was supposed to cut rate then or to announce a QE. But instead, he said that he's going to wait for more data so that he can make a more informed decision. Well, nobody blames him, but the market thinks that's a disappointment. So the pound spiked up instead, went up even further. And this more or less confirms the sentiment is bullish. And after that, it comes back down, confirming that UK's economy is still in a bad shape. And ever since, it has been raging up and down, basically waiting for the 4th of August when Mark Carney gives a confirmation of either cutting rate or QE. So obviously, Thursday is going to be a big day, the huge day for all pound traders, including myself. So what I'm going to be doing is that I'm going to go into position, which I already am, and I'm going to make sure at the point of time, which is, let me see here, at the point of time, which is at 7 p.m. Singapore timing, I will be in front of the computer, making sure that the trade doesn't go against me. Again, SL is in place or break even is in place. I just want to make sure that I do not get out unnecessarily. Why? I might be putting my risk management in place, but I feel that perhaps Mark Carney is going to cut rate plus QE. So when I'm confident that he's going to do that, I basically want to stay within the market itself and make sure that it doesn't take out my SL or my break even. And when that does happen, I'm going to profit from my prediction that pound is actually bearish. Okay, so this is my thought process. Fundamentals, sentiment, they are all aligned, and therefore I am 100% bearish on pound, except if there is a downside, which is BOE holding steady or it does one thing without the other. Again, take a look at the FSI for the last 52 weeks. It is all red. That shows that fundamentals is bad. I will not long pound ever. I'll only be looking for shorting opportunities. If you look at the market, which Karen will go through later, you will see that there is a huge resistance near the 135, 136 area. I believe, and I do believe that pound value is actually kept at that level. So if the price does go up all the way to 1.35, that actually gives me a pretty good shorting opportunity. And I'm actually expecting pound to go below 1.3 if QE and rate cutting is in place. I'm actually looking even further. But again, all these are guesswork. There's still a lot of uncertainty in the market. It has been the only thing that's happening in the market being uncertain. You will look at Thursday's monetary easing from BOE side to decide even further what to do. I'm currently in positions for pound Kiwi and pound USD. I'll be shorting for major and minor resistance, which is a day one or H4 time chart. Okay. Moving on, USD. We are slightly bullish in terms of directional bias, and not just bullish. I'll explain. The FSI shows us that USD is strong with slow but steady expansion. Okay, what do I mean? Look at it. This is actually 21% strong based on 52 weeks, and we are actually staring at a 1.75 points expansion in the economy from last week's data. Now, despite the drop in DXY, despite the negative sentiment coming from traders not expecting Yellen to do her job or whatever, okay. Basically, what Yellen said was just he wants to make sure that she is actually have enough data in order to make a more informed decision. Despite all this, right? Fundamental is still showing me that USD is strong, okay, with a slow but steady expansion. But after FOMC, after the release of the GDP news, it further weakened the dollar index, and this basically was shown here at DXY. So if you remember what Kang said about market correlation, one of the things that I always like to do is to make use of this market correlation from DXY to make sure that the currency stays congruent to my fundamental views. Again, my fundamental views for US is bullish, but this shows me otherwise. This allows me to downgrade my views of the US being bullish to just slightly bullish. No worries though. In this week, we actually have more data, and I love data. Why? It gives me a much better picture, a much better story of what US economy is doing. So basically, I'm looking at manufacturing PMI and the labor market, which is NFP on Friday, and this gives me a better gauge of the US recovery. Now, not many people in this world is very bullish on USD, as bullish as I am, but there's a reason why I say that, because Morgan Stanley recently actually came up with a news that says that, well, USD is actually very bearish. Okay, so how do you actually how do you actually take, is it this one? How do you actually take in such news? Okay, basically, I don't want to be swayed by such bank prediction, or I don't want to be swayed by any form of opinion pieces out there. If they are not going to give me solid facts, solid news, I think these are not the article I'm looking for. Hold on, can I get Kyle to help me out? Okay, I'm just going to bring up that article that we have been reading. I have been reading. Just want to show what I really what I'm talking about here. Do you have the article?
No.
No?
Google.
Okay, let me see. Certainly Bloomberg US. Just see that.
Good news, yeah.
Okay, yes, this is exactly the one. Morgan Stanley wants currency traders, which is us, was to come for dollar. Big headlines. sensational, right? So Morgan Stanley, already a big name, use big words like worst to come $4. Now, do I buy the story? Maybe, maybe not. But I just want to go and zoom into this particular article and show you that there's actually not a lot of data to back up their stance. They might say things like, okay, well, the US demand, domestic demand is set to fade in coming months because they have an in-house indicator showing that US is actually slowing down. Now, show me the in-house indicator then. Why say this and show? Why say this particular statement and not show us that that particular data? The point is, if Bloomberg articles does not always show us this data to back up their stance, I will be okay with them saying this. But the fact is, Bloomberg does. So I'm not actually sure of what this article is actually trying to drive at. Okay, so the market, after the article after that says that it didn't take long for markets to pull in pressure. The greenback fell 1.3% on Friday, and that was even when the GDP actually came out, having its worst week since April. This doesn't prove that Morgan Stanley is right. It just basically telling you what happened on Friday. Okay, so the idea here is that if you see any articles within let's say Bloomberg or CNBC or all the other news, I just want you to know that don't use this information to help your trades, but know that these are what the people are thinking of that. In terms of sentiment, this just basically tell me that they are negative in sentiment. Okay, so does it mean that you want to short USD? No. Does it mean you want to long USD? Also no. What this means is that take all this article with a pinch of salt. If possible, make your own decision on what is the fundamental strength of US. Now, coming from us, of course, we're going to tell you that this is strength. Okay, it is up to you to believe us, to buy in the idea of our fundamental analysis, but it does show us that overall the economy indicators so far has been pointing towards one direction, which is strengthening. Right? So I might be wrong, but I'm going to stick to this because then I have conviction to stay true my US trades. And that's the idea of psychology, of trading psychology. Okay, of course, I always know that if I'm ever wrong, and if anyways my sentiment wants to take me out of my fundamental trades, I know that there's risk management or SL in place to protect myself from even bigger losses. And I will have no qualms, I have no hesitation of getting out because I'm wrong. Because I know at the end of the day, the most important thing for me is capital protection. Okay, so that being said, I'm going to end off with this chart here to show you that US has been going up and going down for the last few years, ever since 2008 recession. The recovery has been strong from what we see in the S&P 500, but we do know that, the S&P right now is going up at its high, but it's actually weakening. From a fundamentals economy point of view, we're actually seeing how the economy has been recovering. As I mentioned just now, slow but steady. Given that right now, US economy is in the green, I will not short the USD. I will only be looking for long opportunities. I do realize that nowadays, when the USD becomes weakened, it is largely due to sentiments. People think that USD is weak. People think that US Yellen is going to do that. People think that S&P is going to go through another round of recession or sell-off. Think, but no data. So what I do is I stick to what I'm good at, calculating the expansion or contraction of the economy, and allows me to make such decision. Again, whether or not you buy this doesn't really matter. At the most fundamental, you have a plan. You need to stick to that plan and just make sure you are protected tomorrow, on Thursday, and on Friday when it is NFP. Okay. For those who are longing USD, be wary of negative sentiments now due to GDP disappointment last week. Look out for ISM metric PMI, average hourly per earning, and the NFP on Friday. And I just want to say, as long as you have risk management in place, SL, you are going to be fine. Based on whatever strategy that you are doing now already, I'm pretty sure everybody is doing okay. Okay, given that the market nowadays is very difficult to trade, it's very uncertain, it's driven by a lot of sentiments and a lot of other different forces that we don't really understand. Find something that you can believe in and just stick to that. At the end of the day, it is not about having the best strategy, it's about having capital protection, having the biggest capital that you ever have, so that earning that $100 is easier and easier. Imagine if you have $1,000 versus you have $1 million, what kind of account, the 1,000 or 1 million, can actually give you an easier $100 return? definitely is going to be the $1 million account. This, I hope, gives you an idea of how important capital protection is. Okay, Ken? Yes, John, I see your request. JT, can you please show the FSLGP again? No problem. John, is this one? Okay, if FER, which is a FX Edge report, is what you guys are looking for, I will be sending it to all of you by tonight. Okay, I for some reason I couldn't send it yesterday or the day before. I'm going to send it by tonight. Okay, but I also have attached a picture, I think, JPEG last week, so that you have an idea of how the other economies are doing as well. Okay. Okay. For those here, I'll be wrapping up these slides and I'll send to everybody in terms of a PDF as well. If not, I'm sure Kayong is also going to record this session and put it on somewhere and send to you guys, so you can go through this video again and again. But I'm just going to do a quick summary. Basically, just this: Aussie neutral to slightly bearish, pound is bearish, and USD is slightly bullish. Remember risk management, and also I do want you guys to understand the thought process behind us setting up a directional bias. It's not just about numbers and figures, it's also about knowing what the traders are thinking out there. I hope this session has been useful. I hope that you guys will be listening more to me next time. If I have a chance, I'll speak to you guys about all this directional bias and fundamental and sentiment analysis as well. Thank you guys for listening. All right, back to you, Kayong.
If you need, pass me back. Okay, very good. Not bad. You know how to use it. Can hear? Okay. Okay, so I hope it's clear. It's first time JT talking. He's quite nervous. That's what he said. But I think quite fun. Okay, I'll go through technical analysis. So basically you understand some of the fundamental direction already. So the whole idea is you want to combine fundamental with technical. So I'll walk you through some of the major pairs that has certain potential. Okay, then again, I think John is very, very active and whoops. Okay. I think John is very active in sharing his technical analysis, so it's pretty good, right? I encourage all of you to do that as well. So whenever you spot any potential setup, you can just send it in the group. But the thing, John, is I think John's analysis is purely on technical. So what you want to do is perhaps you can also add in, certain kinds of filter, like whether it aligns with the fundamental, whether it aligns with the overall sentiment, etc. Okay, so for euro dollar, okay, I think JT went through you that we are looking to buy dollar. Okay, so we have a potential setup over here. It's not the most ideal one, but we are looking at a completion at the 88.6. Okay, which is a bad pattern. And if you draw a horizontal line and you look for some structural support and resistance, right? It's not the most ideal one again, but you do have some very minor one over here. One tested once, all right, 2 times here as well. And then over here, it has been tested up and down for some time. All right, so this is not the most ideal one, but we'll be looking to see how there might be a potential entry coming around at 1.1368. Okay, 1.137 around there. Of course, this one will depend on Friday's NFP and average hourly earning again. Okay, if you look at that 2 data, I think all of you should know that average hourly earnings, which is the inflation data, is actually more important than NFP. So this one, best thing to do is, of course, all of it are aligned. All right, but if they are not aligned, then you need to put more emphasis on the inflation data, which is the average hourly earning instead of the NFP itself. Okay, so this one we are still waiting for it. Basically nothing much as of now. All right, if you are trading off support and resistance, currently price is also trading around the previous resistance. All right, what you are seeing over here is a very tight range. All right, so price has been ranging in this little boundaries. All right, so price currently is trading at the top of it. So you are those kind of I would say more aggressive trader, right? Depending on your strategy itself, what you need to do is follow your plan. So if you have a plan to trade at the high of the range and then sell it and buy at the low of the range, then this one you can actually do it. Okay, but our strategy is we want to stick it with the strategies that we use, basically patterns 2618 as well as the structure, right? So this kind you need to really decide whether is it part of your trading plan. Okay, in terms of pound, what we have over here is also another potential entry to short. All right, let me zoom in a little bit. So over here we have a potential butterfly pattern. Okay, so this one, all of you should have also received all this trade details over the weekend as well. All right, so if I zoom out, what we are seeing over here is technically this, if you draw a horizontal line, right, is not the most ideal level yet. All right, of course, if you are looking at support and resistance, it's actually way higher. It's around the 1.345. All right, but this harmonic pattern, if you look at the butterfly pattern, it completes around at 1.335. So it's around 70 pips different. Okay, so again, you need to follow your plan. Whether you have a plan to trade simply based on support and resistance, or you have a plan, need a pattern to actually trade on it. Okay, so this one, again, pound dollar, we are only looking for the downside, nothing much. All right, we are not looking for any buy setup for pound dollar itself. For dollar yen, you can see because this huge drop over here, all right, it's about 350 pips, right? This huge drop is because of two reasons. One is from BOJ, all right, and then of course the second one is based on last week. US GDP was missing the estimates itself. So a lot of people are expecting it to drop at least towards the 100 level. Right, which if you look at the chart, right, it technically is still viable. Okay, and if it drops to 100 level, it's actually a pretty good level to look for long opportunities. Right, because over here you do have 2 times testing that level already, and then if it comes down, it can also act as a support over here. But if you are trading in terms of patterns or even ratios wise, we don't have much alignment over there. Right, so this one nothing much on it. So the thing is better, again, you need to follow your rules lah. So whatever trading plan that you have, keep an eye on that. As long as you follow and then you have statistics on it, all right, then you should be okay. Okay, but what you can do if you are more advanced in terms of how you want to improve or even add on to certain things on your trading plan, is that if you're expecting price to drop further towards this level, all right, which is the 100 even level, right now what we have is over here we have a small structure that has been broken. All right, so what you can do is, if you anticipate that on a higher time frame or in the bigger scheme of things, right, price will actually eventually fall. So what you can do is you wait for a retracement up towards the previous structure. You can do a counter trend trade. All right, because over here we have a pretty nice structural level. Okay, but again, this is a counter trend because you are selling dollar and buying yen. It's slightly against the fundamental lah. But if you're looking purely on technical wise, you can actually do this. If you pull in Fibonacci, you also have a 50% retracement confluence over there. Okay, so for those who are more aggressive, who don't mind taking certain counter trend trades, you can consider this kind of setup as well. Okay, walking through Aussie will be interesting because tomorrow we have the rate statement. Okay, so depending on what the rate statement will be, if they cut rate, of course, this will fall further. But if they don't cut, high chance it can continue rally. Okay, if you go to a higher time frame, some of the levels you want to take note of is around this, all right, which is the day close over here. All right, somewhere around this level. It is at the 764. Okay, so if they don't cut rate, high chance is that Aussie might continue rallying higher. Okay, if they cut rate, it can continue falling. Over here, in terms of technical, what we have is a divergence setup. Okay, but this divergence is for a short side. Okay, again, you need to align whether this kind of setup fits into your trading plan. All right, so if this one, we actually look at shorting at 618. Okay, so now we are back into it. For Kiwi, it's very similar, right? This two chart, if you look at it, is very closely correlated in terms of their movement. Okay, so if you're trading Aussie and Kiwi at the same time, you want to take note because these two pair, their correlation is pretty tight. Okay, so if you have two setups going on these two pair, you might want to reduce your risk so that your exposure towards Aussie and Kiwi won't be 2 times of it, right? Dollar CAD, the interesting level that we looked out for last week was actually here, but you can see price actually break all the way. If I go up to higher time frame, right, you can see this level was pretty significant in the past. Okay, so it has broke on top, and then right now it breaks back down. So the thing is, for CAD, the important thing is you also need to check for oil. So you're not only trading on Canadian currency fundamental itself, but you're also trading on oil inventories because oil can move CAD. So you need to check on it. On a weekly basis, we have US inventory in terms of the oil inventory. So that one will move the Canadian. So you need to keep track on it. Okay, but based on just purely on technical, you do have 1, 2, 3, 4 over here on a smaller time frame. Okay, and if you draw in, you will find a confluence over here as well, around the 61.8. Okay, this is again sharing with you purely based on technical setups. So you might want to couple in with your fundamental and sentiment. Okay, because if you're shorting this, you're basically shorting dollar and buying Canadian. All right, and if you look at the oil, let me go over, right? So dollar just now, JT shared with you, we are fundamentally, we are still bullish on dollar. So if you're shorting this, you are shorting dollar, so you're actually going against fundamental. And then if you look at oil market, right, even on the day chart, you can see it's dropping. So no, very clear that oil has more room for it to drop. Okay, because if you look at this, the next support is actually around this level. Okay, they still have some room, right? Just slightly below the 40. So there's still some room for oil market to drop further. So when oil drops, your US CAD, right, it might go higher. Right, so this one you need to take note when you're trading Canadian because it's pretty tricky when you want to trade all this. Okay, next one sharing with you is Euro Yen. Euro Yen, technical wise, we have a pattern. Okay, but if you are trading this pattern, you are buying euro and you're selling yen. So again, you need to be very aware of the currencies that you are trading. Okay, euro, if you're buying it, it's actually you're going slightly against it, and then yen, you want to take note. So because on a higher time frame, we can see this pair is very clearly on the downtrend. So if you are trading this, you are more towards slightly towards counter trend. So you want to take note of that. So it's nothing wrong trading counter trend, but you just need to be aware. So how you manage it is maybe you want to cut down on your risk taking certain trades like this. All right, pound yen, nothing much. If you look at all the yen pairs, right, basically their movement again is very similar. So you want to take note if you're trading a lot of yen pairs, whether you are overexposing yourself or not. All right, so nothing much in all this. So I will basically skim through quickly. All right, so those that have, I will spend some time talking about it. Again, this one, nothing much. We do have a divergence happening over here. Okay, so you want to just keep an eye on it, but nothing much has, no confirmation yet because for technical divergence, you want it to break above this before it goes higher. You want to break this level before you consider taking any trades. All right, so right now you just need to monitor it. All right, over here, slightly lower, we also have a divergence setting up. So you can take note of it. All right, so if I draw this, okay, the level to take note of is around the 61.8. Okay, so it can potentially still fall lower until 61 and then perhaps bounce up. Right, so again, if you're trading this, you're basically buying euro and selling kiwi, so you're also going against fundamental. And again, tomorrow if RBA cut rates or they don't cut rate, all right, it will also affect the kiwi because of correlation. All right, so you need to take note of that as well. Euro Aussie, nothing much happening. Pound Aussie, all right, pound Aussie, we do have let me just quickly check. Okay, initially we have a Gartley pattern, right? But because you look at this area over here, okay, price has broken and breached the previous low. All right, so this Gartley pattern has been invalidated. But we do have a new pattern coming up. All right, let me just quickly measure this. Okay, 1, 2, 7. Okay, we have a cipher pattern over here. All right, selling into the 786. Okay, this is how it looks like. Okay, so this one is on selling pound and buying Aussie. So fundamentally it's aligned. But the thing is Aussie, you want to take note because overall it's still in red and there's RBA rate statement. All right, so this one, but if you look at this, right, the price chart itself, from current price to the interested areas of entry is actually about 160 pips, all right? And you take note, this is pound Aussie, so 160 pip movement is actually very common. Okay, so these are all the things that as you trade more and more and you monitor the market, you know that roughly what is the daily range for each of the currency pair, right? So if you are trading like pound Aussie, pound Kiwi, right, on the day itself, you can actually move, 200 to 300 pips each day is very common. But if you are trading on, like, let's say majors like euro, dollar, each day the average movement is just about 100 to 150, and now it's actually lower. It's about 100 to 120 pips only. Okay, so if you know all this information and you measure, right now it's about 160 pips away. Tomorrow RBA rate statement can easily push price up towards that range. Okay, so you need to be aware of some of all this information. And if you look at current higher time frame, what's price doing is also currently trading in a very tight consolidation area. Okay, so this one is just another potential setup. I don't think we'll be taking this trade. All right, so just keep an eye and monitor on it. Pound Kiwi, okay, just to monitor, we do have a double bottom with divergence. Okay, but again, this is counter trend, so you need to take note of that. Okay, but for structural, we have this level that you can keep an eye on. All right, you see over here we have support, 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 and then it breach. All right, so if you draw in your simple Fibonacci, you can see there's also a confluence between 50% and 61.8. All right, so if price reach up towards this level, you can potentially look for a short opportunity. Right, so for pound Kiwi is actually aligned in terms of fundamental. All right, selling pound and then buying Kiwi. The thing is, again, Kiwi is closely correlated to Aussie, so you want to check for tomorrow RBA. All right, pound franc, if you go higher time frame, it's still in a range environment, right? But on a lower time frame, H1, you can see is actually breaking lower already. All right, area of interest is somewhere around here, but this one has been tested. Okay, so once it's tested, normally we just take it as no go already. That means the trade has been done. So for pound franc, nothing much. Okay, just to monitor. Okay, Aussie CAD, we have a pattern. It's a bullish bet. Okay, again, you need to take note of the fundamental on this. So if you're buying this pair, you're actually buying Aussie and selling CAD. Okay, selling CAD as of now, mainly because of oil, is still not too bad. All right, but Aussie itself, you want to take note. Okay, even though this pattern looks huge, right? If you measure the pips difference away from current price to where you enter is about 140. 140 pips for CAD, Aussie CAD, this pair is actually quite big. Okay, because their daily range is just about 100, 150, around that. Okay, so this one itself, it might take a day or two to eventually come down. Okay, again, depend on what's the decision for tomorrow. Okay, higher time frame wise, how it looks like is this level at the 8.6 in terms of price level is 0.976. There's some alignment in terms of previous resistance turn support as well. All right, so these are some of the currency setups that you have. In terms of gold, I think this one John managed to take this trade on gold. Okay, I think John took the Gartley pattern. All right, we should have hit both TP1 and 2 lah. Okay, so moving forward for gold, right now nothing much. Let me just quickly check. Okay, if you are looking for another buy opportunity, we have another pattern over here. Okay, it's a cipher pattern. Okay, completes at 78.6. All right, how it looks like is this. Okay, if I go higher time frame, you can see that this level which this pattern completes, right, has some confluence in the past as well. All right, resistance turns support, and then resistance as well now turns support. Okay, and if you look at this, it's about 250 points away. It's pretty small, right? Because when gold move, it can move quite a bit. Okay, so again, this one is for you to take reference on. We do not have fundamental data on gold. So if you are trading precious metal like this, two things you need to take note of, because they are against US dollar. Right, so the first thing, of course, you want to look at the strength of the dollar. The second thing is you want to look at the risk environment. Okay, basically, precious metals like gold and silver, they rarely when there's certain uncertainty, all right, when there's a risk-off environment, and when currencies actually flow from, let's say, riskier currency towards safe haven and safer currencies, all right, precious metals will also rally. All right, similar to silver, a quick measurement. All right, this one we do not have a cipher pattern. Let me just quickly check. Okay. Yep, we do not have a cipher pattern, but we have a sharp pattern for those who are familiar. Okay. Sharp pattern completion is at the 88.6. All right, so how it looks like is something like this. All right, so it completes at the 886. Okay, if I go higher time frame to look at the confluence, all right, again you have support. It broke and then formed resistance, and then eventually it can come down and test support again. Right, so if you're trading commodities, right, both silver and gold, again, you have to take note of correlation, okay? Because their movement, if you look again, right, the movement of these two precious metal is pretty similar. So the thing is, if you are trading on both setup, you might want to halve your risk exposure, or if you are those that more conservative, you might just want to select one and then pick on it. Okay, so you either trade on silver or you trade on gold. Okay, the last pair in terms of commodities is oil market. Okay, pretty clear-cut oil market. All right, it has been moving in the downtrend. Okay, if you draw in all this, okay, it has been moving down. All right, it retraces up, and then eventually it breaks. All right, it breaks this entire range of support. All right, this support has been tested 1, 2, 3, 4, and then only the fifth time it actually breaks. Okay, so the next time when it comes back up, right, high chance is you're gonna see some reaction over here, and the ideal situation is that there's a very nice confluence of 61.8 Fibonacci. All right, and of course the next level on top, if let's say price continue higher, eventually break this, the next level to look up for is of course your 88.6. Okay, if you look left, you have nice structural level over here as well. Okay, so these are the two levels, two key areas for you to look out for in terms of shorting oil. All right, potential area it can reach is as low as over here, right, which is around $38.30. Okay, just some minor structure over here, which is not very significant. Okay, around the 40. All right, so $40 coupled with a psychological whole number, right, might provide some support. But if you just purely look at price action, the next level to look out for really significant is actually at $38.30. Okay, so any questions regarding this? Check. Any questions? All good? Okay. Okay, if not, right, let me pull out my calendar. Okay, 12th of August. Are you all free? Okay, basically 12th of August, let's do a meetup. I think this one I shared with John as well as Florence that day. All right, let's do a meetup. So I'll drop this on the group chat as well, and then see how many of you can make it. All right, whoa. Okay. Okay, my comm is hanging now. Okay, never mind. Let's do okay, it's working now. Let's do about 7 p.m. All right. Location wise, you guys feel free to suggest, all right, where you want to meet. The last time we met was at Suntec City. Yeah, Suntec City. All right. So the whole idea here is just a casual meetup, get to know each other, catch up, etc. All right. We can have dinner together as well. And if you want, or as in you cannot join us for dinner, you can join us for coffee after that as well. Okay. Any other questions? What's that?
Isaac Manufacturing.
Oh, okay lah. Not too bad lah. Okay. Okay. US ISM manufacturing PMI just released. Let me just pull over the chart to show you. All right. 10 p.m. Right. So this one, US data has just been released. Forecast is 53.1. The actual one that released is about 52.6. Okay. So it's less, as in the actual one is actually missing the estimates, all right, but anything above 50 is still considered expansion, all right, but it's less than estimate, all right. So if you look at dollar, all right, it's not much movement, basically. It didn't really move much, the event, yeah, all right. The reason why it's not an event, all right, because if you look at this week, all right, again, relatively in terms of the importance of the event, right, if you look at Friday, okay, Friday we have key data coming in from dollar US side. All right, so normally if you have super important events like orders, right, NFP, average hourly earning, those events before that might be a non-event itself. All right, basically because the entire focus is for the week is focusing on NFP and average hourly earning. So the rest is not that it won't move the market, right, but more attention is actually put on the more important data set itself. Okay, anything else, Lester, you want to share, or you want to share with them some of the charts, or are you doing intraday, etc.? Anything? Oh, okay, you're fine. Okay, if that's okay, no intraday. Okay, if that's the case, if nothing else, we'll end the webinar here. Taking a break. All right. Okay. If those who are interested in intraday, right? I think last week we shared a little bit on intraday. Okay. Some of you might ask, intraday whether it works or not. Just to show you, it does work. Okay. So let me just show you what happened. Okay. So if this one, you look at this, again intraday, right? Sometimes trades like this you see is actually counter trend because it is pound dollar on a 50-minute. You wouldn't want to long pound over the longer period because you are actually going against the fundamental. All right, but if you are doing day trading, then you go in quick and then you come out quick. You're actually seeing a godly pattern. This one completes around this level. Okay, and then you can see a very nice reaction going back up after that. Okay, so just check if you hit TP1. Okay, this haven't hit TP1. Okay, but basically it goes almost very close to TP1 and then after it comes down. Okay, so the idea is day trading itself, you need to be in front of your computer to do that. So if you're not in front of your computer, it's very difficult for you to do day trading itself. Okay, so this is the godly pattern for those who cannot see it. All right. Again, of course, if you are doing day trading, the shorter the time frame, you go in, the quicker you need to do your analysis itself. All right. So even if you go down to 5 minutes, right, you can actually find potential setups, etc. Okay, but again, I share with some of you as well. If you're going to do shorter time frame, your cost of trading is actually become more expensive because it's a relative terms, a relative thing. Okay, if I look at this, the spread of this pair is basically 3 pips lah. Right, so if your spread is 3 pips and your take profit over here, let me just quickly measure, it's about 40 pips. All right, you are paying almost like 10% of your profit for the cost of trading. So it's actually, you need to calculate all these things as well. Okay, so that's it for this week. I'll need to check if just now when JT is talking, is it recorded on my YouTube? If it's not, good that you guys are here to listen live, all right? But we'll figure it out in the future. If it's not recorded in the future, we figure out how to actually ensure that it's recorded. All right, so with that, we'll text you again on 12th, regarding 12th of August, and then I'll see you guys. Bye-bye.
Never recorded. What the shit?
因为有 echo 啊。